Hey, Mobil Trades! I want to do a video analysis update of the stock market. We'll talk about the S&P, as well as Apple, Microsoft, and Google, Nvidia, AMD, Micron, and Taiwan Semis, Disney, Penn, Delta Airlines, Exxon Mobil, and Oxy, Tesla, Nio Xpeng, and Enphase Energy, ARKW, Amazon, Netflix, Snapchat, Twitter, Facebook, Datadog, Unity Software, Roku, Square Cash, PayPal, TWLO, Bitcoin, and Ethereum. So let's get right into it. The S&P forms a 1, 2, 3, 4, 5 wave 1 and into wave 2, then goes on a wave 3 that goes well past the length of wave 1, placed at the wave 2 low. It has a clean 5-wave subdivision, and it lines up a lot with Microsoft and XLK. So I believe this is a wave 3. This is a wave 4 that ended at the 38.2% retracement. So the textbook levels to the downside for a wave 4 is that the 38.2% fib is the stop, that's 418. The invalidation is the 50% fib, that is 399. So if we're above those levels, the length of wave 1, placed at the wave 4 low, says we can see the S&P go up into the 550s. That can happen this summer, and it lines up a lot with big tech components, specifically Microsoft, XLK, and Apple. So this is a wave 1 and a wave 2 for Apple. I think this is a wave 1 and a wave 2, but all that really matters is within the cycle from the May low. This is a wave 1 and a wave 2. This is a wave 3 that goes past the 161.8% extension of wave 1, and a wave 4 that retests the wave 1 high. I believe that Apple is going to go on a wave 5 that will be at least the length of wave 1 placed at the wave 4 low, likely even the length of wave 3 placed at the wave 4 low. That gives a wave 5 target zone of around 190 to 200. The stock market will not be crashing during that time. And more importantly, it lines up a lot with what we see on Microsoft and XLK. It also is supported by Google, AMD, and Nvidia. So if we look at Microsoft right now, this is a wave 1 and a wave 2. This is a large wave 3 and an ABC correction wave 4. Beautiful wick at the 38.2% fib. So the same levels apply. If we're above 272 to 276, then those are very great levels for market bulls, for big tech bulls, for software bulls even. The length of wave 1, placed at the wave 4 low, says the minimum wave 5 target is 372. This is almost exactly 5 months. So it also kind of helps with the idea that, hey, 4, 5, 6 months from now, we could see that kid at the bus stop wave 5 moment. Possibly more than that, but I think that there's a lot of evidence from Microsoft. This is a wave 3. There's a rule in Elliott wave 3 that says within the same cycle, if the RSI makes a new high, then a wave 5 has not occurred. Basically, wave 5 should end with momentum divergence. So if a new high is made and it doesn't have momentum divergence, then there's not a lot of evidence that a wave 5 has ended. So basically, this is a wave 1 and a wave 2. This is a large wave 3. And if we look at the RSI, we can see that this wave 3 high is the highest level the RSI has seen since this March 2020 cycle began. So I believe this is a wave 1 and a wave 2. This is a large wave 3 and a wave 4. The length of wave 1, placed at the wave 4 low, says Microsoft above 272 to 276 will take it all the way to 378. And that should happen ideally in 5 months. Let's look at Google right now. Google gave a lot of evidence to market bulls. So remember that we had this correction in September of 2020, and we were having this debate for a while. You know, did the crash begin? Were we going to retest that March low, or was this a buy the dip moment when most people were too afraid to invest before the election? What happened was that while SPY and most of the market was still below the September high, Google went and broke out above that wave 1 high before any other stock in the market. I believe a very similar thing is happening right now, that Google is acting as a leading indicator that we are in buy the dip mode, that the bear count on SPY that we're going to see a lot of has already been invalidated by a big tech component. I believe this is a wave 1 and a wave 2. This is a large wave 3 and a wave 4 that ended between the 23.6 and 38.2% fib. So Google should hold above 2,490. If it does, I think this is a wave 1 and a wave 2 that formed from this low. The next wave 3 target is up in the 3,300 range, which is where I believe Google is heading next. So let's look at Nvidia. Nvidia is a beautiful chart for bulls. The most conservative view, like I've said recently, I'll give the conservative view of semis with Nvidia. I'll give the more aggressive, more accurate view, in my opinion, with AMD, Micron, and Taiwan Semis for this video. This is a wave 1 and a wave 2. I believe this is a large wave 3 in progress at the very minimum for Nvidia. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3, and an ABC correction ended wave 4 of wave 3. So if we're above about 195, Nvidia should go the length of wave 3, placed at the wave 4 low. That can take Nvidia to 357. So a lot of wave theorists are going to say this is a deep wave 4, and they're right. But do we really need to make the argument right now that this is another wave 1 and another wave 2 and that Nvidia is going to explode? No, we don't really need to make that argument right now, but we should have it in the back of our mind that this could be way too conservative. Nvidia should hold above 195. I believe it's within at least a wave 5. There will be the length of wave 3, place of the wave 4 low. That means we should see Nvidia hit 357. Let's look at AMD right now, get a more aggressive view, probably a more accurate view of semis. All that really matters for AMD is within the cycle from this low that we formed in May. So I believe this is a large wave 1 and wave 2. This is another wave 1 and an ABC correction that ended at wave 2 between the 61.8 and 78.6% fib. So if this wave 3 is already in progress, then we will see AMD hold above 99. The 78.6% fib of 92 would be a wider invalidation, but I believe this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low gives a minimum wave 3 target for AMD of about 190 before a shallow wave 4 and a wave 5 higher. So Nvidia going to 357, if it holds above 195, that's a minimum expectation. I think a more accurate view of semis is that AMD will hold 92 to this low of 99 and go on a wave 3 all the way to about 190. So that lines up with a lot of big tech. Let's look at Micron. I think Micron could be a big winner. I think it's very quietly going to play catch up. This is a wave 1 and a wave 2 aggressively. This is another wave 1 and another wave 2, but we don't really care about the larger degree count. All we really care about in the short term is if Micron is above 65, 72 would be a little tighter, then this is a wave 1 and a wave 2 that form from this low. We can figure out the rest from there. The minimum wave 3 target would be the length of wave 1, place of the wave 2 low. That would pretty shortly take Micron to 108. We'd have a shallow wave 4 that retests the wave 1 high. Then the length of wave 1, place of the wave 4 low says Micron can go up to 130. So that lines up with a larger degree view that really, regardless of whether this is a wave 1 and a wave 2 or a 1, 2, wave 3 and wave 4, the length of this rally placed at this low says Micron's going to 120 and then eventually 130 even within this kind of next cycle. So this is a wave 1 and a wave 2. I believe that's the more aggressive, more accurate count. I think this is another wave 1 and another wave 2. We'll see Micron hold above 72. More conservatively, it'll hold above 65, start heading to 120 to 130. Very similar view with Taiwan semis, very similar view with Qualcomm. For time, we're just going to talk about TSM and Micron. I think this is a wave 1 and a wave 2. This is a big wave 3 and an ABC wave 4 that ended right around 107. So we're above 107. Then they're making Taiwan semis a little difficult, but this is a wave 1 and a wave 2, very similar to Micron. It's going to go on a big wave 3. I believe ultimately the length of this whole rally is going to be replicated, and that's going to take Taiwan semis all the way up to 208. I think that could happen pretty aggressively this summer. I think that Taiwan semis is also a huge leading indicator that the Asian market is going to do quite well. I posted about JD recently. We have a lot of software names turning around, and I think Taiwan semis going to 208, that's probably going to happen with a lot of Chinese stocks doing quite well, a lot of Japanese stocks even doing quite well. So we're seeing this theme of emerging markets, kind of other countries might be doing well, might be outperforming the S&P even, but I think this is a wave 3 and a wave 4. The length of wave 3, place of the wave 4 low can take Taiwan semis to 208. So that's Taiwan semis. Let's talk about some value names. Here's Disney. Disney's also a streaming stock. I think that's a big piece of evidence. Let's talk about the bigger picture. I think this is always important to kind of talk about, is that there are long-term cycles in Elliott Wave. Some trades are a little more important than others. In my opinion, Disney is a blue chip, and it has a very nice long-term count. This is a 1, 2, 3, 4, 5 massive wave 1 and a wave 2. So the next kind of cycle is that from this low, we form another wave 1 and another wave 2. That means the length of wave 1 placed at the wave 2 low can take Disney up to 250 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, and wave 5 is the length of wave 1, a place at the wave 4 low, Disney can go all the way up to the 320s, the 330s, and in the longer term cycles, that would just end a red wave 3. We have a shallow wave 4 and a wave 5 higher. So Elliott waves are fractal in nature. Yes, this cycle from Disney in the short term is the most important, but the longer term view for Disney, for Boeing, for a lot of airlines, a lot of the transportation sector says that maybe this sector deserves a little special treatment. That's at least what I'm doing. So I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 that ended between the 50 to 61.8% fib. So I want to see Disney in the short term above 126. It wouldn't end the world if Disney went below 126, but that's a nice level. The length of wave 1, place of the wave 2 low says that Disney is not only going to be evidence for the travel and leisure sector, it with Netflix will be evidence for the streaming sector, that we're going to break above this high. This is a massive base. This is the left side of the base. The right side of the base should be a high volume base breakout. And the next stop, the next minimum target would be the 250s for Disney. So Disney's looking good. Let's look at Penn Gaming. Penn Gaming, I talk about DraftKings a lot. I think Penn Gaming gives kind of nice levels right now for that corner of the market. That this is a wave 1 and a wave 2. This is another wave 1 and an ABC wave 2. This is a huge round base. This is likely the left side of the base, and we're going to have a right side of the base, a high volume base breakout. If we are above 33, that is a great level for kind of the casino names. The length of wave 1, place of the wave 2 low, can take Penn Gaming in the bigger picture up into the 170s before a shallow wave 4 and a wave 5 higher. So they make the best opportunities the most difficult. And I know it sounds outlandish that we're going to see Penn go into the 170s, but it doesn't really work the way that, we normally think. It doesn't always do the rational thing. It's going to be explosive if this happens. The length of wave 1, place of the wave 2 low, says Penn going into the 170s, believe it or not, is a minimum wave 3 target with a shallow wave 4 and a wave 5 higher. So it's all risk reward. To me, if Penn's above 33, there's a lot of upside. Even just getting above this high would confirm it'd be a huge return, but that would just be the minimum expectation. That would confirm that a wave 3 is in progress, and even 177 would be a minimum target. We'd have a shallow wave 4 before a wave 5 higher. So the reopening sector looks good. I want to talk about Delta Airlines. I talk about Boeing, American Airlines, and JetBlue. This is kind of an entire sector-wide phenomenon that we're seeing. Obviously, the airlines are going to move together. I believe for Delta Airlines, this is a wave 1 and a wave 2. This is a 1, 2, 3, 4, 5, another wave 1, and an ABC correction ending wave 2 right at the 61.8% fib. What we could see with Delta Airlines is it breaks this clean downtrend, and we'll talk about this with Bitcoin in a little bit, but some Elliott wave theorists will say if there's a clear downtrend and it breaks, then that can be evidence that a corrective structure or corrective wave has ended. So I think that we could see in the future, maybe Delta Airlines is above here, it's about 45, and it's kind of broken this downtrend line. That would likely be evidence that a wave 3 is in progress, which I expect. The length of wave 1, place of the wave 2 low, says a minimum wave 3 target for Delta Airlines would be 60 before a shallow wave 4 and a wave 5 higher. So I think a nice level right now is 33. The wider invalidation would be 30, and it lines up a lot with JetBlue. It lines up with American Airlines. It lines up with Boeing. We'll talk about JetBlue in this video too. I like JetBlue a lot. I think that Boeing, American Airlines, they're all lulling us to sleep, but we've just seen oil explode. And I think what we could see is that the airlines are going to follow oil. That's what they did last year at least, and I think the charts are setting up for that. So this is a wave 1 and a wave 2 for JetBlue. I believe this is another wave 1 and an ABC correction ending a wave 2 between the 61.8 and 78.6% fib. So if JetBlue is above 12, that's the 78.6% fib. The length of wave 1, place at the wave 2 low, says JetBlue can go all the way to 25 before a shallow wave 4 and a wave 5 higher. We can see why they would make an opportunity like that quite difficult. I think we're going to find out this is all accumulation. They got all the traders, all the retail traders out of JetBlue. The length of wave 1, place of the wave 2 low, says the airlines are all going to rally together with Delta Airlines, with Boeing. We can see JetBlue go to 25. 12 would be a nice stop right now. That's 78.6% fib. I don't think it goes. Here's ExxonMobil. Here's Oxy. Man, we've seen a little bit of information from ExxonMobil. I think what we're going to find out is that this count is too conservative. Let's look at the RSI. That new high on the RSI, 76.99, and that is 78. So we'll talk about what that could mean. But let's just talk about the most conservative view. Let's talk about Oxy in a second too. For ExxonMobil, this is a wave 1 and a wave 2. Conservatively, this is a wave 3 and a wave 4. So if this is a wave 3 and a wave 4, then that means that this is a wave 5 in progress. Here's the thing. I don't think this is a wave 5 in progress. So I'll say right now what a more aggressive and probably more accurate view could be is that this is not a wave 3 and a wave 4. This could be another wave 1 and another wave 2 for ExxonMobil. We don't really need to get to that now. We'll talk about what that would look like with Oxy, but I think ExxonMobil has been a leading indicator of a couple of things. The first is that just within the cycle from the August low, it forms a wave 1 and a wave 2. It goes well past the 161.8% extension. So it is confirmed for the biggest kind of player in the oil market, at least one of the most important ones, that within the cycle from the August low, this is a wave 1 and a wave 2. This is a clear impulsive structure. So I think one opportunity could be to find similar oil names that also form a wave 1 and a wave 2, but haven't yet reached that 161.8% extension. ExxonMobil suggests it'll go past it, have a shallow wave 4 and a wave 5 higher. Let's talk about Oxy. What would that look like? I talked about very early into the year, late in December, how we were seeing a lot of these oil names on low implied volatility screeners as well as high liquidity screeners. So when I go to the bar chart, straddle and strangle screener, when I go to iVolatility.com and I check that a stock has high open interest and it also has very low implied volatility, that is often an indication that institutions are hedging for a massive move. So that's kind of what we saw throughout December, was that Oxy and ExxonMobil were all over these screeners. I believe this is a 1, 2, 3, 4, 5 wave 1 and a wave 2 for Oxy. And Oxy kind of supports that runaway train view that ExxonMobil is also now starting to confirm. So that's extremely bullish for not just the oil sector, but I think that's also great news for the airlines. For Oxy, I think this is a wave 1 and a wave 2 that ended at that 61.8% fib. Now this is a big wave 3. It's probably going to explode past 44, have a shallow wave 4 and a wave 5 higher. Here's the thing. That would be 1, 2, 3, 4, 5 waves, and that would be an important high, but that wouldn't be the top. That would be the wave 3 within the cycle from this low from 2020. This would be a 1, 2, wave 3, all the way up above 50 before a shallow wave 4 and a wave 5 higher. I know that sounds wild, it sounds crazy, but that's kind of what ExxonMobil is supporting, that this is not a, this is a wave 1 and a wave 2 from the election low. This is a massive wave 3 in progress for oil. So for Oxy, this is a wave 1 and a wave 2. It's probably next to go above the 161.8% extension of 44, have a shallow wave 4 and a wave 5 higher. So oil isn't gonna kind of go away, and I think that's a lot of good news for the reopening sector. A lot of airlines, I know the media is going to tell you that rising fuel costs is bad for American Airlines. We're not going to have that debate here, but anyway, they moved together last year. Let's talk about Tesla. I'm going to talk a lot about Tesla right now. Let's just make sure my views on Tesla are clear. I'll talk about what I see. So there's a little bit of a debate right now in the LA Wave community about what this larger degree is. So the larger degree conservatively for Tesla is that this is a wave 1 and a wave 2. This is a wave 3 and a wave 4. We're within a large wave 5 right now. That doesn't really matter, but I don't think that's accurate. I don't think that's accurate because I believe from this low, Tesla forms a wave 1 and a wave 2. So it's going to go on a wave 3 higher, tightly, very tightly. It'll hold above 792. The more realistic invalidation is 690. But I believe that this is all a big wave 1 and a wave 2. So the length of wave 1 placed at the wave 2 low says that a minimum target for Tesla is 1478. So in Elliott wave theory, a big principle is that wave 5 cannot be bigger than wave 3. So if Tesla goes to the 1470s, if it goes to the 1500s, then this is not a massive wave 5 in progress because it would be further than the length of wave 3 placed at the wave 4 low. So that's just kind of, I want to explain why I believe on the larger degree that Tesla forms a massive wave 1 and it ends a wave 2 in March of 2021. Here's the thing, very similar to Micron, we don't care about the larger degree. All the Tesla bulls care about is that from this low, this is a massive wave 1 and an ABC correction that ends a wave 2 right at the 61.8% fib. So the length of wave 1 placed at the wave 2 low can take Tesla to the 1470s, and believe it or not, that is a minimum wave 3 target. We'll have a shallow wave 4 and a wave 5 higher, and it's starting to line up with a lot of the clean energy sector. We're seeing Enphase turn around, we're seeing XPEV kind of turn around. We'll talk about Nio right now, but I wanted to really kind of dive into Tesla. I believe that even if someone kind of disagrees with that, let's talk about just the other options for within the cycle from this low. One option would be that this is a wave 1 and a wave 2. This is a wave 3. And that this is simply a deep wave 4. The minimum expectation is still the same. We're taking the length of this rally, placing it at this low, and we're still expecting Tesla to go to the 1400. So I really just wanted to go through all the scenarios I see for Tesla. Let me make sure my final opinion on Tesla is clear before we get into Nio, before we get into Enphase Energy, which I believe is supporting Tesla's evidence. And also kind of let's talk about if Tesla's doing well, if Tesla's exploding, if it's going to the 1400s, then ARK is going to be doing very well. And that's kind of something we're seeing. So I wanted to go over all the scenarios for Tesla, but here's what I really think. This is a massive wave 1. It is cleanly subdivided into 1, 2, 3, 4, 5 waves. We end a wave 2, and then from this low in March of 2021, this is a wave 1 and an ABC wave 2. The length of wave 1 placed at the wave 2 low will take Tesla to 1478. A very tight stop for a high beta stock would be 792. A more realistic invalidation would be 690. So that's Tesla. Let's talk about Nio, XPEV, and Enphase Energy. I think we're getting a lot of evidence that we're seeing Enphase turn around. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 for Nio. It lines up with XPEV, it lines up with Lee, and it lines up with Tesla that a big opportunity right now is in the clean energy sector. This is a big wave 1 and an ABC wave 2. The length of wave A placed the wave B high is exactly where wave C ended. So a lot of LA wave theorists got this better than me. I was looking for wave 2. to have ended right here, but this is an ABC correction. The length of wave A placed at the wave B high is where wave C ended between the 61.8 and 78.6% fib. So the length of wave 1 placed at the wave 2 low says if Nio is above 15, the length of this whole rally will be replicated, and that is a minimum expectation. So this could be a wave 1 and a wave 2. That means that when Nio gets above 66, it's not going to be, yay, Nio just tripled. It's going to be, Nio just confirmed that this is a wave 1. This is a wave 2 between the 61.8 and 78.6% fib. The minimum wave 3 target would be 85 before a shallow wave 4 and a wave 5 higher. We don't need to talk about beyond that, but it really lines up with what we see in Tesla. It lines up with what we see in most of the Chinese market. So let's talk about XPEV. We look at XPEV right now. It kind of also supports the message that a big opportunity is happening in EV. And this is a wave 1 and an ABC wave 2. I believe this is another wave 1 and an ABC wave 2 that ends between the 61.8 and 78.6% fib. If XPEV is above 29, it's wave 1, wave 2. The 161.8% extension is 77 before a shallow wave 4 and a wave 5 higher. But getting to 77 means we confirm an IPO base. Stocks that have recently IPO'd by nature have a much higher risk reward because they are early in their life cycle. This is a wave 1 and a wave 2. That means a massive wave 3 is in progress. This is on the smaller degree, a wave 1 and a wave 2. That means the minimum expectation on the smaller degree, if we turn around at 29, is that XPEV will go to 77 before a shallow wave 4 and a wave 5 higher. And we're starting to see the writing on the wall, even now from the software sector. I can't believe it. The software sector is starting to turn around. We'll talk about that in a second, but I think this is a wave 1 and an ABC wave 2 for Enphase Energy. Remember, Enphase Energy is the biggest holding of basically every clean energy ETF. That's kind of hyperbole, but it's a massive holding of all the clean energy ETFs. So if Enphase Energy goes and breaks above this high, then there's going to be several great clean energy opportunities during that time. I think Enphase Energy is honestly one of the best ones. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. We're at the 78.6% fib. We can see why they didn't make this easy. This, if we hold above 108, is a wave 1 and a wave 2. The next target for wave 3 is 285. We'll have a shallow wave 4 and a wave 5 higher. So First Solar is getting close to 67 for First Solar bulls. If we're above, if Enphase Energy is playing out and Tesla's playing out, then that's very important. We haven't broken below 67 yet for FSLR, but Enphase Energy kind of shows that 108 might be a better level. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. I believe the next stop for Enphase Energy is it's going to have a nice, strong breakout above 282. And the minimum expectation, if we go past that, would be 285 before a shallow wave 4 and a wave 5 higher. But realistically, wave 3 would not end at 282 to 285. So there could be a lot of upside for Enphase Energy. Above 108, there's a lot of reward. Below 108, there's not, that much risk. 108, to the downside, possibly the 300s to the upside. Let's talk about ARKW. Let's talk about the software sector. We're getting kind of mixed signals from this sector. We had a crazy week in the market, but let's kind of look at some evidence and get some really nice levels. I think ARKW is a really great chart for the entire growth sector. I think this is a wave 1 and an ABC wave 2 that ended between the 61.8 and 78.6% fib. So if ARKW is above 72, then this could be an ABC correction where the length of wave A placed at the wave B high is where wave C ends. So the wave 3 target would be that this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low could take ARKW in the bigger picture to 233. The next stop for ARKW is that it will turn around in the 61.8 to 78.6% retracement zone. It will hold above 72, and it will go have a left side of the base. A right side of the base will be on a high volume base breakout. This is going to be the length of wave 1 placed at the wave 2 low. We'll get above 191 and confirm a large degree wave 3 is in progress. That would ultimately say that the minimum wave 3 target is 233. We'd have a shallow wave 4 and a wave 5 higher. So if we're talking about an entire ETF, going to from 91 to the 230s, the top holdings are going to be outperforming most likely. I think that's very good news for Roku. Let's talk about Amazon and Netflix. I think that we could see a couple of things. This is probably one of the most important, charts in this video, is if Amazon holds this low of 2,700, it's important to note that that's not just going to be good for Amazon. That's going to be good for the entire e-commerce sector. And now even we're starting to see a little bit of a rally in Bitcoin. So if the e-commerce stocks and the e-cash stocks are going to do well, that's very good for Square. It's very good for PayPal. I've talked about Visa a lot recently, but let's just talk about Amazon. I think that one view of Amazon is that this is a large wave 1. it's very similar to what we see with Netflix. This is a 1, 2, 3, 4, 5 big wave 1 and an ABC wave 2 right around the 50% fib. So if Amazon holds this low, if this wave 2 low ends and it goes and breaks above 377, then one view of Amazon is that this is all a big wave 1. The length of wave 1 placed at the wave 2 low says that in the future, we could see Amazon go up to about 5,000 in the larger degree cycles. Now, as great as that would be for Amazon, Amazon's a massive holding of O and LN. It's a massive holding of the e-commerce sector. It is the e-commerce sector, right? So this is going to be extremely good for Fiverr. It's going to be great for Alibaba. It's going to be great for Chewy. It's going to be great for XYZ, software and e-commerce stock. This is a 1, 2, 3, 4, 5 wave 1. In my view, I think this is an ABC correction. That dramatic ABC correction that ends at the 50% fib is going to mark a wave 2. We'll see this low stick, and Amazon breaking above 3,773 is going to be a big day for the entire e-commerce sector. It is a huge holding of this ETF right here, ONLN. So Amazon is basically what ONLN is going to do. If it's bottomed, if it's turned around, then this entire ETF is going to turn around. This is a wave 1 and a wave 2 for ONLN. I think this is also a wave 1 and an ABC wave 2. If ONLN is above 42, then this is going to be where a wave 2 ends. The length of wave 1 placed at the wave 2 low can take ONLN in the bigger picture to 110. That means an ETF full of e-commerce stocks could more than double before a shallow wave 4 and a wave 5 higher. So I think this is a wave 1 and an ABC wave 2. If Amazon turns around, ONLN will turn around, and that means that the entire e-commerce sector is going to turn around. I want to see ONLN hold above 42. The next stop would be a wave 3 confirmed when we break above 93, which I expect to happen. So that's ONLN. Let's talk about Netflix. I think that there's a lot of evidence in the growth sector from some of these large cap names. I think for Netflix, this is a 1, 2, 3, 4, 5 wave 1. It's almost the same idea with Amazon. This is a huge wave 1 and an ABC wave 2 that ends at the 61.8% fib. The length of wave 1 placed at the wave 2 low says Netflix can go break above 699, and the next wave 3 target would be 818 before a shallow wave 4 and a wave 5 higher. We just talked about the idea that Disney is a streaming stock that is also the exact same idea. So this is a 1, 2, 3, 4, 5 wave 1. Wave 2 likely ended with this beautiful wick at the 61.8% fib. So a nice stop would be this low of about 351. A little wider would be 331, but I think Netflix above 351. We see Netflix and Amazon hold their lows, then that's not just good for those two names, it's really good for the entire streaming sector and the entire e-commerce sector. So that's something I want to say before we talk about Roku, PayPal, and Square. Let's talk about Snapchat. We got a little bit of a surprise from this stock, a little bit of a surprise. This is a 1, 2, wave 3, and a wave 4. This is a wave 5. So I think that the biggest piece of evidence for Snapchat is that this is a clear 1, 2, 3, 4, 5 waves. And even just this wave 3 is very clearly subdivided into 1, 2, 3, 4, 5 waves. So I think this is all a big wave 1. This is an A, B, C correction wave 2, where the length of wave A placed at the wave B high is where wave C ended. So we get that beautiful reversal. Right now, if we're above 21, that's a little wide. 24 would be a little tighter. The length of wave 1 placed at the wave 2 low says Snapchat is going to go above 83. We'll talk about Facebook in a little bit and Twitter, but what kind of the idea is that a bottom in Netflix, a bottom in Amazon, and a bottom in the social media sector is synonymous with a bottom in the software sector. And I think that we're seeing that over and over in the growth sector. This is a 1, 2, wave 3, and a wave 4. This is a clear 1, 2, 3, 4, 5 waves. I believe this is all a massive wave 1. This is an ABC wave 2 that ended between the 61.8 and 78.6% fib, above 24. A wave 3 is in progress right now. That could, in the bigger picture, take Snapchat to 100. The next stop is 83. That would confirm a wave 3 is in progress. And then we'd have a shallow wave 4 at 100 before a wave 5 higher. So Snapchat kind of shows that a lot of growth stocks, a lot of software stocks, a lot of social media stocks could be turning around. And I think Twitter is the exact same idea. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. Twitter, I believe, will hold above 28. A little tighter would be this low of about 32, but I think this is all a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So if Twitter and Snapchat and Facebook all rally, that's going to be very good. The length of wave 1 placed at the wave 2 low says that Twitter will go above 80, and then a minimum wave 3 target in the future would be 92 before a shallow wave 4 and a wave 5 higher. One thing I like to point out about Twitter is that it has a lot of chart history And in the bigger degree count, this from the low that was formed in 2016 is a clear 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So I believe this is also another wave 1 and an ABC wave 2. So the length of wave 1 places the wave 2 low would end a wave 3 around 92 before a shallow wave 4 and a wave 5 higher. So I think 32 is a little tight. I think 28 is a nice invalidation. And Twitter and Snapchat can all rally with Meta platforms. So let's talk about Meta right now. I think this is a wave 1 and a wave 2. I said in my post recently that the conservative view is that this is a wave 3 and an ABC wave 4. So we're going to expect at the very minimum the length of this rally places this low to give a equal legs target of 480. I think all that really matters for Facebook, we don't really care if this is a 1, 2, 3, 4 wave 5 or if it's a 1, 2, 1, 2 Elliott wave nest. But I do believe this is a 1, 2, 1, 2 Elliott wave nest because wave 4 is normally a triangle. It's normally a sideways bull flag that ends around the 38.2% fib. The scary ABC correction, the dramatic 3 waves that end at the 61.8% fib, that's often a wave 2. So I love the idea that this is a wave 1 and a wave 2. Whenever the wave 1 high gets retested, that's a big deal. I think this is another wave 1 and an ABC wave 2 at the 61.8% fib. A little tight would be this wave 1 high of 224. The wider invalidation would be 190. The length of wave 1 places the wave 2 low, says Snapchat, Facebook, and Twitter are all going to turn around. And that's basically synonymous with the growth sector, the software sector turning around. This is a wave 1 and an ABC wave 2. The length of this rally places this low, really in any degree count, says if we're above 224, that's tight. 190 is a little wider. Facebook can go to the 480s in the longer term cycles if those levels hold. Snapchat and Twitter support that idea. Let's talk about some leaders in the software sector. We'll talk about some laggards too. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 that ends at the 61.8% fib for Datadog. And I think that this is all a clean 1, 2, 3, 4, 5 wave subdivision in an ABC correction. The length of wave 1 places the wave 2 low, says Datadog is going to hold above 118 and go on a wave 3 higher. That means the wave 3 target will be 248 before a shallow wave 4 and then a wave 5 higher. So this is 1, 2, 3, 4, 5 waves. That's a large wave 1. This is an ABC correction that ends a wave 2 at the 61.8% fib. So that wave 2 low of 119 is a little tight. I think it holds. The length that rally placed at this low says 248 is the next minimum wave 3 target, and Datadog is identical to Zscaler down to the date. They're the exact same chart. I think the idea is that what we're going to see is that Datadog and Zscaler, they were leaders. They actually did pretty well from that low that we formed, that most of the growth stocks formed in the second quarter of 2021. I think this is a 1, 2, 3, 4, 5 wave 1 for Zscaler and an ABC wave 2. It looks identical to Datadog, a 1, 2, 3, 4, 5 waves impulse from the May low. That forms a large wave 1. This is an ABC correction that ends wave 2 at the 61.8% fib. So 203 is a little wide, a little tighter, would be 220. And then just like Datadog, the length of this rally places this low can take Zscaler to 439 before a shallow wave 4 and a wave 5 higher. I think these are the leaders. The next time they rally, the laggards like Fastly, like Pounder, they're going to do well. We're talking about Unity software. I get a lot of evidence from some of these leaders in the software sector. This is a wave 1 and an ABC wave 2. Unity software is now turning around. I think this is another wave 1 and an ABC wave 2 that ends at the 78.6% fib. I've talked about how Unity software, Pounder, a lot of these stocks in the software sector are also in the IPO ETF. So I think what is going on is that Unity software is the leader of Pounder in the same way that Datadog is the leader of Fastly. This is a wave 1 and a wave 2. The length of wave 1 places the wave 2 low, says the next time Datadog rallies, the next time Unity software rallies, we're going to have the laggards join them. I think Unity software's next stop is 222 for a minimum wave 3 target. I think that nice stop right now is this low of 90. So there's a low to trade against for some of these leaders in the software sector. Some of these laggards like Roku could do quite well. I think this is a 1, 2, 3, 4, 5 wave 1 for Roku. I love the idea that we're seeing Netflix turn around. We're seeing Disney turn around. One day doesn't make a trend, but we have a lot of supporting evidence with Roku. We also have a lot of downside levels from Roku. I think this is a 1, 2, 3, 4, 5 wave 1, and this is an ABC correction wave 2, where the length of wave A plays the wave B high is where wave C ended. So Roku is one of the biggest holdings of ARKW. ARKW above 72 would be a big deal. So this is a big wave 1 and a wave 2. What we could see possibly from Roku is what we saw from Snapchat, where this is that scary ABC correction, that very quick ABC correction The length of wave 1, place of the wave 2 low, could take Roku to 600 for a minimum wave 3 target before shallow wave 4 and a wave 5 higher. The 78.6% fib of 125 is a important level to the downside for Roku because there's not really much to trade against besides that. But I think Netflix, I think Disney, and I also believe that ARKW are going to be extremely important charts for Roku. This is clearly a 1, 2, 3, 4, 5 waves impulse. Nice 5-wave subdivision. I believe this is all a large wave 1. This is that scary ABC correction ending a wave 2. If Roku's above 125, then it's going to be leading ARKW. It will be leading ARK. I also want to see ARK above 60. Here's Square Cash. Here's PayPal. I think we're getting a lot of evidence for the entire e-commerce sector that these two are going to turn around. We're even seeing Bitcoin now turn around. But what we just talked about with Amazon is that Amazon bottoming is synonymous with the entire e-commerce sector bottoming. And I think that that's what we're going to see. Now we're starting to see one by one, all these software stocks turn around, all these growth stocks turn around. What we could realize in the future is that all that blood that we saw in January was rotation. So whenever the stock market is just blood red, every ticker is red, one of two things is happening. Either A, the super top, the bear market has begun. All right, that's possibility one. The other possibility is that the market is rotating from a different winning sector into a losing sector that most retail traders have fallen asleep on. We're seeing Snapchat turn around. We're seeing Amazon turn around. We're seeing some of these growth names turn around. What could be happening, what we'll wake up in the future and find, is that all that blood in January was rotation. And one of the sectors that was being rotated into was kind of that ARK ETF. And we're seeing now Bitcoin's rallying a little bit, Ethereum's rallying a little bit, and Amazon's rallying a little bit. That's all very good for Square Cash and PayPal. I think this is a wave 1 and a wave 2 for PayPal, for Square Cash, and Square Cash has not broken below 87. So that is a nice level right now. That's 78.6% fib. I think that ARK holding above 60 and ARKW holding above 72 are very important levels, but I believe this is a wave 1 and a wave 2 for Square. The length of wave 1 placed of the wave 2 low can take Square to the 350s before a shallow wave 4 and a wave 5 higher in the larger degree. I think Square is very similar to Twitter, where there's more than just from the March low at play. I think this is all a big wave 1 and an ABC wave 2. What did they do before that last big Square Cash rally? They got retail out. They always get retail out before the big rally. I think this is an ABC correction. I think retail is right. That Amazon and some of these e-cash names, they could be the next Amazon. We could see that MasterCard is a future analog of what Square Cash and PayPal are going to be. But I think that this is a big wave 1 and an ABC wave 2. I think this is another wave 1 and another ABC wave 2 for Square Cash. I think what we're going to find out is that Amazon rallying, Bitcoin rallying, even Snapchat and some of these software names rallying is a leading indicator that the selling is done in ARK. If ARK is above 60, if ARKW is above 72, then we're going to see that this is a wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. Square will hold above 87, and then it's going to go break above this high of 289, confirm a large wave 3 is in progress. So Square above 87 is better than any level that we get with PayPal. The problem with PayPal right now is that we don't really have a low to trade against. That's really kind of the only issue. We're at the 78.6% fib. We are at the wave 1 high of 124. So I think ARK above 60, I think ARKW above 72, and I think Square above 87 are going to be extremely important levels for PayPal. But we're seeing now Amazon's turning around. We're seeing Snapchat turn around. We're even starting to see Bitcoin and Ethereum rally a little bit. That's all going to be very good for the entire e-cash and e-commerce sector. I think PayPal forms a wave 1 and a wave 2. This is another wave 1 and an ABC wave 2. So there's no level to trade PayPal against right now. What some Elliott wave theorists will say is that when that happens, just wait for the wave 1 and then buy the wave 2 with a stop below the wave 1 low. For me, I manage risk for growth stocks up front with position sizing, taking smaller positions to compensate for that higher beta. But what we could see in the future is that PayPal forms a wave 1 from this low. Then a wave 2 will be a buying opportunity in the future before waves 3, 4, and 5 higher. I think ultimately, though, we're going to see Square hold above 87. This is a wave 1 and a wave 2. We'll see ARK hold above 60. We'll see ARKW hold above 72. And this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low can take PayPal up to 352. Here's what I'm trying to say with MasterCard. Here's what I'm trying to say with Amazon. If we look at what happened in 2008 with MasterCard and with Amazon, I believe there could be a little bit of an analog. If we zoom in on this chart, if we scroll to the very beginning of MasterCard's history, I think we see a possible analog for what could happen to PayPal and Square in the future. This is a wave one. This is an ABC wave two. If someone tells you they're investing in MasterCard, what do we think? That's pretty normal. That's a pretty safe, stable stock. That is a blue chip. You know, there's nothing really too crazy about investing in MasterCard. Well, guess what? MasterCard used to be a high beta gamble. They said that probably retail got scammed, that credit cards were a fad, that e-commerce was not gonna go anywhere. And I think MasterCard could be in the future an analog for what we see PayPal and Square do right now. That's wave one. This is an ABC wave two. Luckily for MasterCard, it held above the 78.6% fib. So far, Square Cash has 2. So far, ARK has held above 60. So far, ARKW has held above 72. What this could be for MasterCard is a wave one and a wave two. And if at any point PayPal and Square are above these highs, this could be the result. Okay, and we're still talking about setups in Visa and MasterCard and Amazon to this day. Let's look at Amazon. You think Amazon was an easy buy? You think you could have bought Amazon in 2008? What if someone called you a retail bag holder? What if Amazon broke below this 78.6% fib? Let's measure this. Everyone says they want to buy the next Amazon. So let's look at the Amazon chart. Could you have bought this? Most people couldn't. Most people couldn't. And if we look right now, let's just get the fibs exact. From that low, that was 25.76. 25.76. And this high is 101.09. Let me make sure that's exactly right. This high is 101.09. What happens? From this low, this is a wave one. This is an ABC correction wave two. And Amazon goes below the 78.6% fib. Retail traders are told they got scammed. They're told e-commerce is a fad. And what we could see in the future is PayPal and Square are above this high. And this is the result. We're still talking about setups in Amazon, MasterCard, and Visa to this day. So I'm not saying that PayPal is going to be the next Amazon. I'm not saying that Square is going to be the next MasterCard. I'm saying if Square is above 87, those are possible analogs for what could happen. And if ARK is above 60 and ARKW is above 72, that defines the risk. The reward is what we might have seen for the past 10, 12, 15 years with Amazon and with MasterCard. They don't make these names easy. Let's talk about some software names. Here's TWO. So many of these companies that have reported these massive earnings, they've said, hey, we're making all this money because of cloud computing. That's what IBM said. That's what Amazon said. That's what Microsoft said. That's what Apple said. And yes, I know that they said other things. I'm just kind of paraphrasing. All these kind of companies mentioned that cloud computing was going well. I think Google also mentioned that cloud computing was going well, not Apple. But anyway, this is a wave one and an ABC wave two for TWO. Between the 61.8 to 78.6% fib, TWO will hold above 151. It will go the length of wave one, place of the wave two low. And that means above 151, the next stop is this wave one high in the bigger picture of 457. The length of wave one, place of the wave two low, can take TWO on a wave three higher to 565 before a shallow wave four and a wave five higher. This is wave one, ABC wave two. We'll hold 151 and go the length of wave one, place of the wave two low on a wave three higher to 565. And believe it or not, that is a minimum wave three target. We have a shallow wave four before a wave five higher. PayPal and Square, they're getting a little bit of evidence from these cryptocurrencies. So that's kind of going to be important to watch. This is a 1, 2, 3, 4, 5 wave one and an ABC wave two, a bottom in Amazon and a bottom in Bitcoin. That's kind of synonymous with a bottom in e-commerce. It's kind of synonymous with a bottom in ARK. This is a wave one and a wave two. I think this is another wave one and another wave two at the 78.6% fib. will hold above this low of 28.9K. Very tight will hold above 33K. But I think 28.9K is still pretty reasonable because we have a really high beta with Bitcoin. But this could be wave 1, wave 2. The length of wave 1 placed with wave 2 low could take Bitcoin to 73K before a shallow wave 4 and a wave 5 higher. If we zoom in on Bitcoin a little bit, what some Elliott wave theorists will do is they'll say if there's a clear downtrend on a stock that someone believes is in a corrective structure and that downtrend breaks, then that is evidence the corrective structure has ended. On the daily chart, we kind of see that. So I can't tell my broker about this, right? I can't tell my broker that PayPal is the next Amazon. I can't tell my broker that Square is the next MasterCard. And I can't tell my broker that Bitcoin just broke this downtrend. I think it did, and I think that's a wave 1 and a wave 2. The next minimum wave 3 target is 73.7K. We'll have a shallow wave 4 and a wave 5 higher. The key to growth investing, in my opinion, in my unprofessional opinion, also the key to just high beta investing in general is taking smaller positions, okay? I know the value stocks are boring, but those are where the bigger positions go for me because they have lower betas. That way, I manage kind of risk up front in growth with the position size because I know that it's going to be hard to stomach when they try to get retail out. I've heard a lot of horror stories about retail traders getting margin called because they went all in on growth on margin. Now they don't have them. That's exactly what the market makers want. That's exactly what happened to a lot of crypto bulls. But I think that we're going to see that was retail margin liquidation to get all that supply. This is an ABC correction. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. Very tight. Very tight. Wave 2 is already in. Will hold above 2.1K, a little wider, a little more reasonable, would still be 1.7K. The length of wave 1 placed with the wave 2 low says a minimum wave 3 target for Ethereum will be 5.3K. We'd have a shallow wave 4 before a wave 5 higher. Wave 4 retests the wave 1 high. Wave 5 is the length of wave 1 placed with the wave 4 low. There is a path right now that takes Ethereum to 8,000. Okay, it's going to be a step-by-step process. The first step is to hold above 2.1K, confirm wave 2 is already in, and that Ethereum is within a wave 3. If Ethereum's within a wave 3, we'll figure that out pretty soon because wave 3 is going to be more explosive than wave 1. The length of wave 1 placed at the wave 2 low is a minimum wave 3 target for a high beta kind of asset like Ethereum and Bitcoin. It's not going to stop at 5.3K. We'll have a shallow wave 4 and then a wave 5 higher.